supply level, so the supply. Yeah, man. Flow. So supply, let me say, I depending on the let's say the current price. See, show you this thing. The price is currently at 3361. So anything beneath this area, so here becomes demand. So here, if price wasn't, if price was supposed to be here, let's say 3314, this would have been supply zone. But right now, price has broke through this area. The moment price broke through a supply levels, say, let me see, let me put two levels for here to explain this thing for here. So here, then here. So let me explain this thing here. Take my brush. So let me say you are here. Let's say you are here. You are here. Then let me use a ball. Yeah, a ball. This is a ball. Ball. So the ball is in the middle of here. Let's say this is a fence wall. At the top, this is the floor. Let's say it's a story building. So this is the top, the ceiling. Let's say the ceiling, and this is the floor where the person is standing. Let's say. So this is the person. This is the person, and this is the ball. So the moment the person drop the ball here, it reacts to this floor, then bounce back. So this floor supports the ball. The ball can't go further past this area, the floor. So it supports its then bounce back. Same applies to this area. The moment the person throws the ball up to this area, it will hit the ceiling here, then bounce back. It can't go towards this area. So this place becomes a blockage. It becomes a resistance area. It becomes a blockage. So the moment the ball hits the ceiling, it comes back and hits the floor. That is the support. Then bounce back again to the ceiling. But the moment the ball is able to penetrate through this ceiling, let's say it's a plastic ceiling, where the force the ball is coming with, ball breaks through this area, then goes up. You see, the moment the ball breaks through this area, another ceiling is here. It's a story building. Another ceiling is here. So goes up, hit this ceiling, and comes back. If it comes back again, it won't break through this area. This area is now another floor. You see, this was a ceiling, but the moment the ball breaks through this area, it becomes a floor. Then the ball hits here and bounces back again. So this area is no more a ceiling, but it becomes a floor. And here is the current ceiling. So let me show you something. Same applies here. Let me show you here. So I'm coming. Let me clear this one. I didn't add eraser. So let me use it. Control this. Okay, so let me show you something here. So here, this was a floor. This was a floor. Sorry. This is a floor. And this area is a ceiling. It's a bit slow. I should have added the external keyboard. Sorry, mouse. So this is the floor, and this is the ceiling. This area is a ceiling, and this is a floor here. So let's say the ball was here. The ball was here. Here. The ball was here. So as you can see, the ball came down here, reacted to this area, which is the support. It's a floor, it's a ground level. So the ball came here, reacted to this area, and came to this ceiling. So this is a ceiling. This area is a ceiling. But with the pressure the ball is coming with, the ball hits the ground here and came back upwards with a pressure, the lots of pressure. So it broke through the ceiling, then went up. So if the ball, let's say, loses pressure and it is to drop, it will drop to this area. Then use this ceiling as a new ground to push price up. So anytime price breaks through a ceiling, it's no longer, let's say, it no longer has the ability to hold the price down. Let's say you see ceilings are to hold the price down, but right now the price, the ball broke through the ceiling. So right now it won't hold price down, it will hold price up. So let me mark as much as supplying. Yeah, resistance to a support. So it was supposed to push price down, as you can see clearly here. Let me show you something here. Here, price broke through this area, so it was a break of structure. Break of structure here. So this area, with this liquidity here, with this liquidity here, see price formed an engineer liquidity here. Engineer liquidity here. So here, so this area was a valid point. This area, you see, it was a valid order block. This area, it's a valid order block because it pushed price down from here, pushed price down to break through this area, and price engineer liquidity here. So it sweep this liquidity. It will use all the sellers here as inducement traders. It will induce them, tap into this order block, then sell even more. But because it was NFP, the momentum was very high and it couldn't push price down. If it was to be an ordinary day with no news, this area would have hold price down, push price even lower, but it was NFP. Then let's say the dollar came out weak, so as you can see, the gold was lashing the dollar up and down. So here, so I've marked as much as supply and demand level. So I mark fresh areas. I don't like area that has already been break. You see, as price is going here, this is a fresh area. You see this top here, price has not yet reacted to this area, so it's a fresh area, fresh my supply zone here. It's a fresh supply zone, and the moment price breaks through a supply zone, it becomes a fresh demand zone. See, price hasn't yet come down to this area, so this is a new demand zone. Price has not yet reacted to it. As you can see, this price has not yet reacted to this supply zone, so it's a fresh supply zone. So here, I think here, like I was saying, this is also a supply zone, sorry, a demand zone. Price did react to this demand zone, but like the way I trade, I wait for price to clear liquidity. This liquidity was not cleared. It was not clear, but I use this one. Sorry, the reason why my bias was to buy was because I used this demand zone. See, This was a demand zone. It was close enough to this one, but the reason why I used this one was price reacted to this area, cleared this liquidity, cleared this liquidity, cleared this liquidity with this bold bearish candle, this bearish candle. So let me take this one out. So we go see it's very clear. So clear this liquidity here with this red bearish candle, this candle. So if price cleared this liquidity, and if price was able to do something like this, so let me turn this, let me use the path. So right now, clear this liquidity. This is the main supply zone, sorry, demand zone. This first horizontal line upwards. So if price cleared this liquidity here, if price did something like this, came back here, reacted to this zone, and gave a new bearish candle here, if price pushed up to this area, here, and it gave a bearish engulfing candle to this area, I would have no doubt than to sell. But as you can see, price pushed upwards, but you know, it broke through this when price breached this demand zone. It was supposed to serve as a what, a supply zone from a support level. It was supposed to serve as a resistance level, but price came up, didn't respect this area as a resistance level, broke through upwards again, then gave a fair value gap. Fair value gap is was to be fetched on the 1 hour time frame. You see, 1 hour time frame, trend, break, reversal, FVG, OB, and liquidity. But key levels, fair value gap can also serve as a key level. So this is the 4 hour time frame. So what I saw was a fair value gap here. And when price came up, was getting to NFP. That time was really getting to NFP. So here, so this was the fair value gap. So let me use my rectangle here. We are still on the 4 hour time frame. So here, sorry. So I saw a fair value gap here. Fair value gap here. You see? Let me zoom in. Let me name it FVG. So a fair value gap here. Price pushed down. You see, with this candle, then fill the fair value gap. But this was the bottom of the fair value gap, the first candle that formed the fair value gap. So anything below this area should be safe. Even if you are to buy here, then put your SL here. This area should be your safe haven. So the moment price is able to breach through this area, you'll be looking for something else. But let me show you something here. Price, I feel this area became choppy around this area because it was really getting to NFP. Came choppy around this area. Let me put this one backwards. Put this one backwards here. So the moment price filled the fair value gap, it became choppy because it was really getting to NFP. Really getting to NFP. So this is the same 4 hour time frame. So this, and price gave a confirmation here. See, the confirmation I like the most is the engulfing candle. I don't joke with the engulfing candle, not at all. So you see, price gave these bearish candles, bearish candles. Then from nowhere, a bullish engulfing candle came in here. After it became choppy around the fair value gap, you see, price has filled the fair value gap. Then I was waiting for confirmation. With this engulfing candle, it gives confirmation that the fair value gap will hold price. So if it was to be something like this, was to become very choppy. Then it will give you a, a bullish candle, but not an engulfing one. You see, if this was to form a bullish candle to this area and it didn't close engulfing, then the next candle here becomes a bearish candle, bearish engulfing candle, and then it engulf the bullish candle. I'll have no doubt but to sell, because price has already filled this fair value gap we are aiming for, and it has given a bullish candle, but the next candle engulfed the bullish candle, so showing that the buyers are trying to push price up, but they couldn't close to this area, so there's less momentum of buyers in the market. But the moment the bearish candle engulfs the bullish one, it shows that now there's more sellers in the market. So with this candle, there was choppy sales. Then from nowhere, this candle came in, closed beyond this candle, so it signals more buyers coming into the market. So what I'll do is this: I will mark the tip of the candle that got engulfed. So the high of the candle was this area. The highest the price went was this area. So mark this one out. Then I'll mark the engulfing candle, the middle of the engulfing candle, just like this. Then I'll go to the 2-hour time frame. This is the 4-hour, so down to 2-hour. So here, this is the 2-hour time frame. So from the 4-hour time frame, we go to 2-hour. Here, nothing proper, as you can see. This is the area the price got engulfed. So I'm searching for price action after the engulfing candle. So next to the 1-hour time frame. So you can see, look at this area. So this is the area price got engulfed, this vertical line. So anything next to this area is what I'm looking for. So as you can see, this area right after the 4-hour engulfing candle, you see the 1-hour also give us an engulfing candle here. You can see here. So what I'll do now is delete the 4-hour, then mark the 1-hour. Sorry. So I'll mark the 4-hour. Then mark the candle that got engulfed. I'll mark the high of the candle, so the wick. So here. So now I'll go to 15 minutes time frame, look for price action after the engulfing candle. So 15 minutes. Sorry. 15. So this is 15 minutes. So 15 minutes. So this is the area price got engulfed. So after the engulfing candle, you can see here fair value gap on the 15 minutes time frame. It's a confirmation. But you see, gold with because there was a lot of, let's say, a lot of buyers in the market, gold didn't come down to fill this fair value gap, but it gave what? It rigged it with this rigs. It rigged this area. You see, the more reason why I mark the wick of the high of the candle that got engulfed is something like this. You see, the high of the candle that got engulfed was this vertical line. Sorry, horizontal line. This horizontal line. You see, price played on top of the horizontal line. As you can see, price played on top of the horizontal line. Give another engulfing candle here, but I would have entered here. I missed this trade. I told you I missed this trade, but the reason why I would have entered here is because this is the high the price the highest point there, a a sorry bearish candle went before it got engulfed the highest price. So I mark this area, price become choppy. But what I'm watching here is that this was the area. Let me show you something. This is the fair value gap here, here. But you can see price cleared this, rigged the fair value gap twice. First wick was here. Let me show you. Let me zoom in more. So first wick was here. Was this candle. The second wick didn't go beyond this candle. And the next candle came very small. See, it was drawing away from the fair value gap. Then boom. This was a bearish candle. Then boom. Another engulfing candle came in. Can you see? So this is the 15 minutes time frame. You can even push it to even lower time frame. So even if you are looking for a very good risk to reward, can put this, mark this engulfing candle, then mark the highest point price went. So this is the highest point. The next candle went, the price that got engulfed went. So his area. Then you clear this one out. There is the 1 hour. Clear this one out. There is the 15 minutes engulfing candle. So 50 minutes, you go down to 5 minutes. So here, so looking for good risk to reward, a very good risk to reward. This is 5 minutes. 5 minutes, fair value gap here. Price never got to this area. So if it was to be someone who would have waited on this fair value gap, trust me, you would have missed this trade. It will pain you. I tell you, it will pain you if you miss this trade. I mean, one thing I do the most is sometimes I don't come down any lower to the down to the 15 minutes time frame, but I come down to 5 minutes time frame or even less to find a suitable point for my Excel if I'm to break even. So I say this is the 15 minutes time frame. Once I get confirmation from this is from 4 hour to, I say 4 hour to 1 hour to 15. So there's no need to go down even lower to the 5 minutes time frame. So here, the moment price gave this engulfing candle a 15 minutes time frame, I won't wait for any other thing here, because let me show you something here. One thing about engulfing candles is I add something else, here. This is the 15 minutes time frame. So this engulfing candle came in here. This engulfing candle. If you look at, I mean, you can see the engulfing candle very well. That's why I've zoomed in. You see, this is the highest point the bearish candle went, this area. And the bullish candle, engulfing candle closed here, this area. You can see the closing point here. So let me take this one out. So if you look at this area from here, the closing point of the bullish candle, then the candle that got engulfed, how do you see? You see gap. You see a gap. So let me draw something here. Let me pick this one. So from here down to this area, if I could say, from here You can see from the closing point of the engulf candle, then the highest point the bearish candle went. You see a gap from here to here. It's a gap here. As you can see, it's a gap here. Then the highest point of the bearish candle, then the closing point of the bullish candle, engulfing candle. There's always a gap, and price will drop no matter what. No matter what, price will drop to fill this gap. No matter what, price will drop. Even on the 4-hour time frame, on the 2-hour time frame, price will drop to fill this gap. So mostly I enter here. The moment price fill this gap, I put my entries for here. Bam, I catch for here. The highest point of the bearish engulf candle, I put my entries for here. Then my stop loss, the lowest price went before the engulfing candle. So here, the lowest price before the engulfing candle was here. So five pips, few pips below here for spread. If price is to come here, so 5 pips below this area, the safe zone. So you see, if this candle didn't drop to this area, didn't drop to fill this gap, this area, this order wouldn't have been picked. It would have been a pending order, because if I'm to draw this even lower here, as you see, you know pick them, but the highest this candle went was here. As you can see, this zone, the highest of the bearish candle is here. So you put down for the highest the candle went here. So the moment price drop to fill this gap, you get picked. You get your order gets picked from here. Then you drag them go. The moment price form new support, you see price has formed new support for the A here. New support here. So here you break even. Price form new support. You are safe to break even. Then you scale your profit. So let me show you something on the 1 hour as well. See here. Look at this area. The 1 hour engulfing candle. Same thing I was talking about on the 15-minute time frame. Look at this area. This is the engulfing candle here, and this is the highest the bearish candle went. The highest here. You can see the highest here. So from here to the closing point of the engulfing candle, which is here. The closing point, which is here. Let me drag it here rather. Drag it here. You see, there is a gap from here to here. The highest the bearish candle went to the closing point of the engulfing candle, that's the bullish candle, is a gap. You see, usually the way price came down to fill the gap. Fill the gap. Then after filling the gap, boom. Look at this. You see the reaction. Filling the gap. If you see these swing traders would have entered, the swing traders, once they enter, they enter on the higher time frame here. If I was to be a swing trader, I would have put my buys for here. The highest the bearish candle went here. Then my SL. The lowest the price went before it formed the engulf candle. So here, 5 pips below here. Then scale my profits upwards. Same on the. I use this every time on any time frame I do. Any time frame. So let me clear this one out. Then go to the 4-hour time frame and show you the same thing with the engulfing candle. even if it's a daily time frame, price will always reverse to close the gap, and what to do is you catch it at the neck. The moment you catch the entry at the neck, trust me, you are good to go. If nothing happens and your analysis is right, the trade will go in your direction. Simple and easy. So let me show you here. This is the 1 hour time frame. Even with this area, even if with the short-term sellers, this was a demand level. See, price came down, reacted to this demand level, clear liquidity. Try respecting this demand level, but as you can see, look at this area. This is a bullish candle. All these candles were bearish, then a bullish candle came in. As you can see, it never closed engulfing, but the next candle, which is bearish, as you can see, bearish, it engulfed the bullish candle. The moment it engulfed the bullish candle, from here to here is the gap. Price came and filled this gap. Then look at this, it sold. So if it's a short term like LSG or no, he used the big lot size. If someone is to sell this area from here, even from here to this area, this is the liquidity clear. This is the fair value gap. So to this area, so let's say the liquidity. So if someone sells from here with the same lot LSG, we use 90 lot size from here to this area, trust me, that is big money. From even here, this is 1 hour time frame. So from here, if someone sells from this area, quick scalper, let's say in and out, highest price went before the engulfing candle. So here, then down to this area, this liquidity here. This is 2RR. If someone sold from here with a very nice lot size from here to here, even one lot size from here to here, this 1 hour time frame. So let's say entry, let me see the entry is 1292, then profit is 1282. That is 100 pips. 100 pips from here to here, 100 pips. So 100 pips is 100 times 1. That is 1,000 points. So if you have to use one lot size, that is 1,000 USD. 10 lot size is 10,000 USD. But I'm not really talking about the sell. So let's go to the 4 hour time frame. Let me show you. So this is the 4 hour time frame. So this is the 4 hour time frame. This is the engulfing candle. The highest, the closing point of the engulfing candle is here. It's here. Let me draw this even. Sorry, hold on. Okay, so here. Oh, slow. Okay, let me do it like this. So here, and the highest, the bearish candle went is here. The highest point of the bearish candle is here. So you see, the moment price closed engulfing here, the next candle sold down to close this gap. I even went lower because I think even if you go lower, you will see that the reason why price came lower is because maybe there was a gap there that needs to be filled, but it never went down past this area. The lowest price went before the engulfing candle is here, this area. So even if you put your buys here, you are an early buyer, you buy here 5 pips below this area, highest price went here, you'll still be in the game because you price won't hit your SL. It never even passed this area. Then you scale down your profit. Okay, scale here. So when price reach here, you break even. Then you leave it the price to pump even go higher. It will still be in the game. So anyway, I missed this trade. It pained me. Because I was one moment I was watching the chart, the next minute, then the chart left me. Charlie was great, but the moment I opened this chart, I was like, my bias was bias in the thing bought because I saw this fair value gap, I saw this price action, but I left before the engulfing candle came in. I left chart. Hi. If I was to stay, even I left to because I was at work. I left to serve a customer. I came back and this thing was gone. Hi. Because I've been watching from here. I marked the fair value gap. Everything on MT5. I marked everything on MT5. I was I was watching closely. Then here, the thing left me. Hi, it pained me. Because from NFP from here to this NFP gave more than 1,000 pips. I swear. NFP gave more than 1,000 pips. You put 0.01 cry, if you get $100 so. Hi. My bias was right. Bias was right. That's what really matters. My bias on good was very right. Me, also, I'm not the one near the chart, but if I get entry before the NFP, because all this area, this NFP started here. NFP started with this candle, this long vector candle here. That is where NFP started. But all here was before NFP. So if I get entry before NFP, or even before a major news, there's PPI, CPI, before any major news, I'll still hold my grounds because I got the entry before NFP, because NFP the news will be hunting for liquidity, and from where price was coming from was reacting from a demand level, and it had given all confirmation necessary. Everything was necessary. So next thing was for price to hunt for liquidities at the top there. So with this next week, I think gold, gold will drop. Gold will buy more, but I'll be banging on gold coming for this here, coming dropping to this area, fill this gap, then we get more buys inside. So I'll wait for gold here, or more so, even if it doesn't come to this area. Sorry, if gold doesn't come to this area, it's supposed to do something like this: pull back, even if a pullback, to respect this area, bank up, or pull back to respect this area, then bank, or drop more from here to fill this gap and give us more buys. So here, I only watched NFP during the news, so I only watched. I only watched gold during NFP. Sorry, yeah, it was NFP. Yeah, NFP. So first, take easy. It was crazy. The move was crazy. Yeah, go open silver. Hold on, give me. So here it was crazy move. Oh, it's in the wrong my machine. It was crazy move. So first, the profit was here. Second profit was here. Third profit will be here. Then the greedy TP will be here. Yeah, greedy TP. Yeah, liquidity level, drawn liquidities. Yeah, drawn liquidities for. Yeah, yeah, 3 hour. Most more time, I take most of my profit at 3 hour. but I don't close all positions. I take, let's say I enter 0.02, let's say 5 positions, making it 0.1. So then if price is to go in my direction and fill 3RR, I'll close, let's say, 3 positions, 0.02. That's 3 positions. Then I'll leave the remaining two. The remaining two, I'll take from halfway to my greedy TP. Let's say here, this is the greedy TP here. You see, let's say 3RR was here. Here. So here, this area. I would have closed most of my positions here. Then leave the remaining one here. The remaining two. Oh. The remaining two here. To this goody TP. But the remaining two, I'll close. That is, let me say, 8.3. So I'll close one of the remaining two at 4. That is halfway to the greedy TP at 4RR. So let's say somewhere around here. I'll close another position, let's say somewhere around here. Then leave the remaining one to the greedy TP. Also, look at this area. Let me show you something here. Reason why gold will definitely drop from here. The moment gold fill this area, when gold tap this area, I'll be expecting sales from this area. When gold close this gap here, gold will definitely sell here from this area, this gap. Because if you look at this area, this was a demand level. This area, demand level. See, as price was coming from here, the top here, this was a demand level. It was supposed to hold price even upwards, but price clear liquidity here. Clear liquidity here. It managed to hold price even with these two candles, but right after this bearish candle, oh sorry, so right after this bearish candle, it's my brush, this bearish candle, if this let me do it small, this bearish candle, if this bullish candle was supposed to close manage to close engulfing and engulf this bearish candle, price would have bought higher. But it wasn't able to close engulfing. You see, it closed beneath the highest point the price went, the bearish candle went. Closed beneath this area. Then the next candle came in. The next candle, this was the bullish candle. The next candle came in very hot. Then it gave a bearish engulfing candle. It engulfed the bullish one. And price wasn't able to come up. You see this candle? This candle was supposed to come up and close this gap before selling. Can you see? So price, it wasn't able to come up. You see? Let me show you something. From here to the closing point of the engulfing candle, it's a gap. This gap, price was supposed to push up to close this gap, but I wasn't able because the momentum of the sellers was very high, so it pushed price lower without closing the gap. And now looking from this area, so let me show you. Okay, I'm zooming very high, so now looking from this area, price is now approaching this gap. So with no doubt, if This area is a valid point. When price tap to this area, I'm expecting sales from this area, this candle, this horizontal line. I'm expecting sales. So let's say opening here, expecting sales to this area, then upwards, or even to this area, then upwards, or price to come and close all this gap with the vector candle, then push up to the greedy area, push up to this. Oh, I hate this thing. Push up to this area. Let me see. Price, we can get in. Let me see. Oh, it's very far from here to here. It's very far, but anything can happen. We can get an all-time high, a new all-time high. But it's very far from heaven. Yeah, fundamentals there. I don't really sure that look this area. Oh. My this thing is pure technicals. So, pure technicals. How they look fundamental side. Come flashing, yeah. Yeah, that one today. That one today. I mean, yeah. You have to be on alert, yeah. To say anything. Yeah. You understand something they go on for the news side. You must so I check Forest Factory though. I check them for major news. At the small news I know they bother. They check for major news. Yeah. So I put my destined filter for red folder news, high impact red folder news. And I put down for let me say USD. USD we me at the check. USD news we at the check. Me I shown the rest. So let me see silver. Let me see waiting go on for silver. Silver too. Silver they slow. See the way silver drop. Alright, nice. So the silver was nice, so but silver didn't really buy like gold. Yeah, them correlate. Silver them go them they correlate, but yes, silver no buy no. I see even from here, silver drop even more than gold. And also them they go the same direction, but more so but sometimes one if silver they buy, gold will go buy. Or if gold will buy, silver go buy. But it will depend on the momentum. One will get momentum past the other. Yeah, but them will go the same direction. But let's say gold they go times 10, then silver will go times 2, and silver too can go times 10, then gold will go times 2. With 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 this area, you see this more buys here, buys from here to this area. We go check gold. That same time, we see that gold could buy to this somewhere here, from here to somewhere here. But them go the same direction though, but the speed or the momentum will go take carry go no. You know, be the same momentum the other will carry. Even with this self, you see, this was a demand zone. The demand zone. This was also a demand zone. Yeah. See the way price come down to this demand zone. Cleared all the internal liquidities here. Then we clear liquidity. See, there's very low liquidity here in this area. So price clear liquidity. It just drop. You see the way it clear liquidity. As it come up to this area, I can show you. clear liquidity. Then it came up. As it came up, it even gave a bearish this thing, engulfing candle here. Then it sold. The moment the engulfing candle came in, it sold. So from this area to this area, could have caused a nice P, a nice RR. This is 4 time frame. So from on the lower time frame, from this area to this area, you can catch. Let's see, what point was it? Let me see. From here, let's see something. This is for the scalpers. Almost scalper now. This here, this area. Oh, to this area. Not even up to even 2 RR. But if you go to the lower time frame, with this AEB, for entry was 36.6 GP, 36.3. Yeah, we have got a nice RR on the lower time frame. A nice RR with this point, but not really looking at this area because price has already respected this area, pull up. So I'm looking for buys. When price has respected this area there, if this a bearish candle was supposed to form below this area. See, let me show you something here. Oh, okay. I see this area. This is the demand level. Price sold through this area, cleared this liquidity here, but still respected this demand level. So if the bearish engulfing candle was supposedly let's say closed below this demand level, it would have formed a new a resistance level. But you see, it closed above this area, so it's not counted. So anything above this area, which is bearish, should not be your concern. But if it closed beneath this area, beneath this demand zone here, closed beneath this demand zone with an engulfing candle, that would be your confirmation. But it closed above. So anything above this area should be a bullish engulfing candle you are looking for. Beneath this area should be a bearish engulfing candle you are looking for. So here, this is the noise. This is noise. All these are noise. So right after this area, this was your confirmation. This here, this engulfing candle was your confirmation. This one here. This engulfing candle was your confirmation. So from here down to the 2 hour. Very nice fair value gap, a 2 hour time frame. Here, fair value gap. See the way price can break it. Price can break, then it is going. Can break the fair value gap, then it is going. So forget the noise. Let's go to the 1 hour time frame. Very nice. As can break this thing, you see, next candle was drawing away. Then they give a new engulfing candle here. You can see here. So this is the closing point of the engulfing candle. This is the highest of the bearish candle here. Instead of let's see, let me zoom in more. Price no really close them. Price no really close them. It came down all right, but it didn't really close them. Down to the 15. Price didn't really close them. See, you would have seen as the price came down, but it didn't close them. It's choppy. Price is choppy. It's really choppy. So silver can drop because if you look at this area, and show you the 4 hour. Look at this area. Oh god. Price formed the new this thing here, resistance level here. Then it gave an engulfing candle here. Price didn't close this gap, but it's now that price has closed this gap. You see, price come close this gap. You see the way it drop, the price pushed up, drop to this area. But where price is coming from, silver can buy more because price is coming from this demand level, and from this area there's nothing holding this area because it broke through nothing here. If it was to be something like this here, this area, sorry, where's my shift, this area, so if this area was to be a demand level that has been breached, if there was a demand level here, then price broke through, I retest it, then give this engulfing candle, then this area would have been a valid point. But there's nothing here. Just it's a fair value gap though. This area is a fair value gap from here, here. It's a fair value gap. It has been disrespected. As you can see, there is a gap here. 1, 2. That's the reason why price reacted to this area, sold a bit. But this demand level is it's a high, it's of high probability than the fair value gap here, because price has cleared this all the internal liquidities here, reacted to this area, and it is pushing up. So I'm banking on more buys, but as silver they correlate with gold, and gold is already at the tip of selling, because from that area, this area was saying this area, more price for this area, we are to see some more sales here, sales here, sales here, sales to close this gap. So if gold is to sell from this area, if this is a valid point, gold will be selling from, then silver too can sell. This area will hold price, push silver down more, then wait for gold to fill all the gaps, then it will move together with gold for more buys. Really bad. So so let's see. BTC2 was BTC day one side, BTC mafia me, so and then BTC no dey go eye to eye. BTC really mafia me. So and then BTC no dey go eye to eye. Choppy price, choppy, very choppy one. Very choppy price. Very choppy one. Anyway, silver to mafia me. Ah, let me show you something for here. This area. Yeah, silver to mafia me. This area. Make I show you something for the 2 hour. You see, this be the 4 hour. Let me show you something with this choppy price action. This area. I enter sell. I buy, so I enter buys for somewhere here. I was in for buys because for this area, yeah, our price reacted to this area, this other block here. There's an imbalance here, other block broke to this area, so this is a valid point. Price reacted to this area, I think gave an engulfing candle. Oh yeah, I was using MT5. Yeah, it gave an engulfing candle on MT5. Yeah, I didn't check trading view, but I was analyzing on MT5. So I saw an engulfing candle, then I took buys. As I take the buys, the thing, choppy price action. Go, I still want to move. So move, go up small, then to come back to draw down. I just want to come back to negative. I just want to come. I was like, what the fuck? What is going on? So as price, this one here, the silver went up. Then all my positions were in profit. So I closed everything. When I closed everything, sales. Hey, like wow. I make like say I close something, because if I didn't close this area, now else I would take. Yeah, I'd open like 5 positions or so. Yeah, I will take maybe 0.02, then I'll go open 5 positions. Let's say 0.01, I'll go open 5 positions, then I will wedge. If all of them, if this thing go in my direction, I will break all of them break even. I will enter more position add. But you see, I don't know flip account. I just start positions. You see, just adding more positions as the moment price keep going in your direction. If you enter for the neck, if you catch am for the neck per way where you drop from that area where you are able to break even, you catch am for the neck, you break even. You should search for more entries add, then you go break even, then you go watch as price dey go your direction, then you go take with the close positions, you go close the more positions. The one you catch for the neck there, no go close am early, but the one you go close early be the one you go dey add, because the one you catch for the neck down there, the moment price will come to that area down there, that means the setup is invalid. But price shouldn't come to the neck. If you catch am for the neck there, price shouldn't come there. So if you catch am for the neck, then price come to that area, means it's invalid. But if it is valid, price will keep going. Then the one you catch am for the neck there, that one bring more profit. Go bring more profit than the one you go they stack. The one you be adding on the way upwards, or even if it sells downwards, even if let's say you catch sales for here, enter 0.01, then you are able to break even here, then enter another position for here, then the thing start the sell. You see, from here, if you sell from here to this area, and this position here is giving you $50, the one from here will give you, let's say, $100. So if you close the $50 here, this one, then leave the $100, because if price can easily come down to this area here, knock you out. But this area is a safe zone, because this is a new supply zone here. Because even if price is supposed to come to this area, it will knock your position here out. But here it's a pillar. With the barb, it's a pillar. So the moment price is able to breach this area, penetrate, manage to come to this area, that means it is giving new buyers. It is giving more sales. Buys rather, giving more buys. It means the sales are over. Charlie. So that be my NFP interaction. Yeah, that be thing. So I missed NFP. I missed them. It pained me. Pained me. Yeah, it pained me. I was really hoping this thing. I was hey. As I opened my this, I was like, wow, what the fuck? Hey, I missed this thing. It pained me too. Hey, it pained me. Pained me. It pained me. Hey, wow. See pump candle. Hey, Charlie. This candle. If someone with a very big capital put 10 lots for 10 lots, catch up for 10 lot size for here, Charlie, the person go cash out to like LSG. LSG no dey trade good. I never see LSG trade good before. FS LSG more time it be AU, EU. That one I never see LSG trade good before. Because if with the crazy lot size they use, if you go and venture gold, I swear, account go blow. Cause they use 90 lot size, then you go open like 5 positions. So open 5 positions for 90 lot size inside. Hey, Charlie, you can't put 90 lot size for gold. If drop come here this area, your account is gone. Gold yeah. Plenty people they feel good, oh Charlie. I know the film. Me, I dey like good though. Me, I dey like volatile. You peso. Yeah. Me, I dey love gold, matter. Gold, silver, NAS, BTC. I like high volatility. The one will go kill you sharp. If you go save you, I go save you. If you go kill you. No, no, kosasa, kosasa. Do you go dey play with your mind, and then it go hit your SL. But fast forward, good. Fast if you go hit your SL, fast, bang, then you are out. You go and rest. You go and sleep. If you go buy two, if you go your direction, you take your profit, then you are out. But GU, it go take 3 days. You go to play around, then later you go come hit your SL. Waste waste of time. But if you enter gold, that day now if you go hit your SL, that day now I go clear am. We go make you go and find new buyers. Go enter. Sorry. Yeah, you go fail because small move on gold, then you are Gucci. Oh. Chill guy. Small move on gold, then you dey feel. Very volatile. Gold, yeah, man. Everywhere most people dey fail them. The volatility, it be mad. It be mad. The volatility be mad. Oh, if you catch am correct collector. Charlie, slow, slow. Charlie, slow. Good day if you catch am correct. Like this one self here. To enter 0.02. Even 3 positions. You go take pass account here from here to here. You go pass account. You not talk me. You not talk me. Buy 8K account. Oh, okay. Go from then that one to chill. You know, I don't really they get time, so I just they spider this thing. Then we then be Julius with the more time with the get time plus in phone, so he they execute the student things. But you see my work, they know they allow you make you use phone, so I make slower. But if everything go through, if everything go through, this yeah talk. You see, me I dey leave house maybe around 6:40 or 6:40. The work they start around 8 and we close at 5. You see from 8 to 5 before after 5 there, then the market makes slow. Then now you mix all your opportunities. You see, they break it be 45 minutes that time. From 12 going 12. I mean I know they go early. I will go around maybe like 2 p.m. Ah, you know it could be 12 or so. Yeah. Yeah. If them they allow me to use my laptop then phone self crash, they can chill. This year I buy my forms again. So if everything sorts, I go pull out for screen inside. If I pull out for screen inside, yeah. You say that one my phone go do my side this thing. So if I did thing, it will alert me. Yeah, I mean lecture I go take am serious though, back. Maybe the course they do, maybe it no be hard. Maybe the course they do, it no be hard. Maybe, Until IT no be giri master. If you be computer science and can you go rec, can you you go lectures. I mean, I dey I dey go do start. I dey go do start at my major. I dey go do statistics. So you know if you go full one small, yeah. Sorry. Sorry. So make we end this thing then. Tomorrow we go continue. Yeah, tomorrow. Yeah. Say tomorrow be Sunday. Yeah, I will look out. Yeah, outlook. Yeah. Monday say will be holiday. Monday say will be holiday. So. So that's it, guys. If this video was helpful, don't forget to like, comment, and subscribe to support us in creating more videos like this. Thank you for watching.